Are you considering if your business should be a LLC or a C corporation? Do you know the difference between the two? Well, stay tuned because this video will take a deep dive into the differences and similarities between an LLC and a C corporation. And also, I'll be discussing which might be the best option for your business. I'm Crystal, CPA and co-founder of Life Accounting, where we like to teach and empower small business owners to take complete control of their financial picture. Today, I will be discussing the key differences and similarities between an LLC and a C corporation, especially the tax differences and what you could expect to pay in taxes with each type. I'll also explain the compliance requirements of each and how you can decide which is best for your small business. Now, to be fully transparent here, I'm not a lawyer, and by no means am I giving you legal or financial advice, but I am a licensed CPA, and I will break down the gist of the legal jargon and especially focus on the tax items so you can avoid paying too much in taxes. And as we all know, or should know, how you decide to structure your business significantly impacts the amount of taxes you pay. After all, taxes are your biggest expense, all of which and more I'm going to explain to you in this video. Make sure to subscribe to our channel if you're new. We publish videos almost every single day, and I'm confident that one, some, or all of them will help you navigate accounting and tax in your life. All right, let's dive in. One of the biggest differences between an LLC and a C corporation is taxation. This is probably the single most important difference to understand, and you should be aware of it. C corporations experience double taxation. Double taxation means the C corporation as an entity pays taxes on its income. And when you, the shareholder of the C corporation, takes money out in the form of a dividend or distribution, you are also taxed personally. So with a C corporation, you are paying taxes twice on the same income. Did you catch that? The income is first taxed through the business with corporate income taxes. This income already includes the distributions or dividends that you took out of the business. Then it's taxed again on your personal return for any amount you took out of the business in the form of a dividend or distribution. The current corporate tax rate is 21%, and the federal deadline to file and pay these taxes is April 15th on Form 1120. And the individual tax rate on corporate income would depend on your personal tax rate and would consider all of your income from all sources. On the other hand, LLCs only pay tax on the individual level as a default, meaning the LLC entity does not pay taxes directly, unlike in a C corporation situation. But the income earned through the LLC is passed to the owner where taxes are assessed. This is called pass-through taxation. Most LLCs are single members, so those tax returns are due April 15th. For multi-membered LLCs or S Corp LLCs, those tax returns are due on March 15th. However, as an LLC owner, you can actually decide how you want your LLC to be taxed. So you can be taxed as a sole proprietor, an S corporation, and even a C corporation. So as you can tell, an LLC offers you more flexibility in taxation, whereas with a C corporation, not so much. You're going to be double taxed. Another difference is how LLCs and C corporations are formed. There's a lot more administrative work with forming a corporation. First, corporations are required to have articles of incorporation, which is simply a set of documents that are filed with the state to legally document the formation of the corporation. Second, there's the corporate bylaws, which are a set of rules and regulations adopted by the corporation. Third, you have to elect a board of directors. The board of directors represent the shareholders of the corporation. Fourth, you have to hold a board meeting, which is a formal meeting with the board of directors to discuss performance and other major issues in the corporation. Fifth, you also have to hold a shareholders meeting, which is a formal meeting with the shareholders of the company to vote on specific issues and review finances. Both board and shareholder meetings are required to occur at least once a year, and details of those meetings must be kept in the meeting minutes in order to maintain corporate status. Sixth, and finally, you have to issue stock and shares in the company based on what was invested as capital in the corporation. That's a lot. Most corporations seek the help of an attorney to form their corporation. Forming an LLC is much simpler. First, you need to have your articles of organization. This is a similar document to the articles of incorporation for C corporations. Next, you should have an operating agreement, similar to the bylaws, which outlines how your LLC will operate. It's important to note that both the operating agreement and bylaws, and even the articles of incorporation and organization, are legally binding documents. It is very important to understand what is being included in these documents because they could come back and bind you later on. The last difference I want to touch on is the ownership of each. A corporation can issue shares of stocks and sell percentages of the business to its owners or shareholders. These shareholders can then buy or sell their shares for more or less ownership in the company. A corporation also exists in perpetuity, separate from its shareholders, meaning that a corporation remains in existence even when a shareholder leaves the company. An LLC has the freedom to distribute its ownership stake to its members without regard to a member's financial contribution to the LLC. For example, a member of an LLC may not have invested as much capital as another member. However, an LLC's operating agreement could specify that all members receive an equal share of the profits anyway. This creates more flexibility when establishing the ownership of the LLC. All right, so we've talked a lot about the differences between an LLC and a C corporation, but what about the similarities? Well, for one, both LLCs and C corporations offer its owners limited liability. For LLCs, this is literally a part of its name, limited liability company. But what this means is the owners of the LLC or corporation are not personally liable for the company's debts or liabilities. So basically, if someone sues your LLC or corporation, they cannot go after your personal assets like your house or personal funds. Another similarity is that LLCs and corporations can both be owned by U.S. and non-U.S. individuals, which is not the case for S corporations. LLCs and corporations also allow you to have unlimited owners, which could be helpful if you're planning on starting the next Fortune 500 company. Which actually brings me to my next point. Which one is right for your business? Again, I'm just a CPA, so I can only really speak from that perspective. But for most business owners, LLCs tend to be the better choice. LLCs are the definition of flexibility. They give you the choice of how you want your partner's ownership percentages to be allocated. Not to mention, you can choose how you want to be taxed. So if for some reason you want to be double taxed, you can certainly do that by electing to be taxed as a C corporation, or you can elect to be taxed as an S corporation or a sole proprietor or a general partnership. It's really up to you. I think you can probably assume which one is my personal favorite, but generally speaking, unless you are seeking investors or planning on going public with your company, LLC is usually the go-to. They are simpler to set up and easier to maintain. I hope you found this video helpful. If you did, please give it a thumbs up, and I'll see you in the next video.